Hello again, everyone. Welcome back. In this technical analysis of the stock market video, we're going to see where we sit at the end of Friday, April 25th. Had a heck of a bounce in the markets, and as you can see here on the ETF dashboard, the biggest mover to the upside with the Qs up 6.4%. Everything was positive, but when we look at year to date, everything is still in the red, and the Russell 2000 is the most negative, down 12%. When we look at the 16 sectors that I track every week, we had 15 positive this week and 1 negative, dramatic improvement from last week's basically 50-50 kind of scenario. So now we're back to a very strong type of move. I'll talk about a couple of my indicators in here. The biggest mover to the upside, semiconductors, 10%, huge move. And of course, right there with it, XLK up to 8%. The only one that was negative was consumer staples, down 1.25%. Now, year to date, though, we still only have 3 positive and 13 negative. The 3 that are positive, consumer staples, healthcare, and utilities is the strongest. Retail has now edged ahead of semiconductors, down 14%. Now, I'll tell you what, the consumer sentiment stuff that's been coming out recently, oh my gosh, it's horrible. Not really a surprise, but it really is bad. It's going to be interesting to see how things play out over the next month or two. Okay, so let's start off here with the Dow Diamonds. Didn't move very much on Friday, up 4 cents, basically flat, but for the week up $9.66. Okay, so we're still in a downtrend in here. We're still kind of, last week I talked about being trapped, with that big wide-ranging candle that we got on April 9th. We still haven't really broken above that range here on the Dow Diamonds, at least not on a closing basis. So we'll see how long that takes. Let's take a look at the SPY. And I'll come back to that arrow. I'm going to be talking about something here on the SPY. Up 395 on Friday. So now we've had 1, 2, 3, 4 days in a row. Pretty strong little short-term push. Is that it? Now the SPY has closed above the high of April 9th. Up 24.23 on the week. So pretty strong looking week. Basically a bullish engulfing of the prior candle. If you look at that prior candle in here. And closing above the high of the week two weeks ago, right? So that's where we sit with the S&P 500, kind of in, a little bit in no man's land. I mean, is the bottom in, or are we going to retest the low? I think the jury's out on this a little bit right now. Let's take a look at the Qs. Okay, so here's the picture with the Qs up 521. The Qs have closed above that range, that April 9th range also, and up 4 days, 4 days in a row. On the week, up 28.46. So very similar to the picture we just talked about with the SPX. All right, so let's talk about IWM. And we're going to look at the Elliott Wave picture on IWM this weekend. All right, so up 6 cents on Friday. So basically flat, very similar to the Dow Diamonds. It's interesting that many days I see that the performance in terms of either percentage move or up or down or whatever, that the Russell is similar to what the Dow Industrials are doing. And I'm not quite sure why, but anyway, I seem to notice that. So we're still kind of trading within the Wednesday's range, okay? So what looked like a potential reversal candle, we just didn't get any follow through at all. And I saw this on numerous stocks and all the other indices. It was up $7.64 on the week though. So yeah, we're closing above. So the only one that hasn't closed above that April 9th range is the Dow Diamonds at this point. So let's take a look at the Elliott Wave picture. Here's what I'm looking at. On a weekly basis, I'm thinking there's a possibility that the first intermediate wave down is finished. But I'm also looking at this. You know what? I'm going to move this over to less than a week. We'll look at it on the daily. I do have an alternate view in here that maybe says 5 waves aren't quite done. And again, the bigger picture on this is that we're into a C wave, an ABC, a big flat that's going on in the Russell. We tried to get bullish. We tried to put this into a much stronger move to the upside, and it just refused to hold. Okay, so it is what it is. And what it is negative. Okay, so here's what I'm talking about. When I look at this closer, there's a very real possibility that instead of 5 waves, that this wave right here, from up here down, is 3 waves. I mean, is the third wave. And this price action looks and acts like it's a part of a third wave. So it makes me think we could be looking at 1, 2, 3, and having a 4th wave that we're still trying to digest and try to figure out what happens in here. So that's the alternate count to what I've got. And I've been looking for this to flesh out a nice zigzag pattern here for wave 2 on a pullback. Doesn't have to be a zigzag, but that's my default choice. And it's been a struggle trying to get it to accommodate that scenario. So we'll see what we get. Okay, so that's where we sit with the Russell right now. The overall picture and overall trend is pretty negative. Okay, that is the indices. Let's take a look at a couple of indicators. Okay, I'm going to go back to this moving average view. Just going to put this and just show the daily. And what I want to do is pull up the McClellan oscillator. Okay, so this got on our radar earlier this week. And Thursday, we had a reading of plus 247 on the McClellan oscillator. We sit on Friday at the close at plus 227. Plus 227 is exactly where we sat on January 21st, okay? And then you can see what happened after that. And the reading that we got on Thursday of 247, higher than January, higher than July 16th, which was basically the peak last summer before we had that big collapse into the early August, right? The first week of August. Okay, so we are more overbought than either of those scenarios. We are extremely overbought right now. So that's one of the things that I look at and say, okay, where we've gone, we are extremely overbought. But on top of that, we got a swag breath thrust to the upside. Okay, so a swag breath thrust is where the 10-day moving average of advancing and declining issues on the New York Stock Exchange go from less than 40% to greater than 61.5% in 10 days or less. That's exactly where we got to on Friday at 63.19%, according to the numbers I have, which are pretty doggone accurate. Okay, so that is really, really interesting. And let me see if I can get this to shrink down. Let me go back to the SPY. So this is where I'm talking about. We have a swag breath thrust. Now, since 2015, we've had 3 other swag breath thrusts. And let me just go back real quickly and just show you. There's no guarantee. We're extremely overbought right now. Okay, and not surprising that you get a breath thrust with extremely overbought either, is it? Okay, so the real question is, what does that imply for short term? Now, the swag breath thrust, I think, implies very positive out 3, 6, 12 months out in the future, which is exactly what I'm looking for. But short term wise, there's just no guarantees. Okay, short-term wise, it's a crapshoot, I believe. So let's take a look at a couple. Let's look at the 2 others. Since 2009, since the low in March of 2009, We had one March 19th, 2009, July 10th, 2010, July 9th, 2013, December 29th, 2015. So let's just go back 10 years to December 29th, 2015, and let's see what we had. So I got a swag breadth thrust by the data that I've got, which is, again, very accurate, occurred right here on December 29th. Well, you can see what happened over the next month, month and a half. Not real positive, but when you start looking out into the future, it was just in the middle of a big corrective pattern, okay? And it ended up, moving higher, but it took maybe 6 months for the bull to really resume and just start pushing, okay? Well, that takes us to the end of 2018 into 2019. You remember that December of 2018, right? It was horrible. It was a bloodbath. And it, that culminated with that Christmas Eve disaster day. And then we got a swag breadth thrust on January 8th. Well, the market just took off like a rocket into 2019, okay? And just kept pushing. Now, nothing ever goes up in a straight line. But overall, it was acting pretty strong. Now, the next one we got, and the only other one we got prior to where we are right now, is March of 23, March 31st of 23, right after the Silicon Valley collapse. All of that happened. So we got a breadth thrust. But look what happened short term. Pretty choppy for the next month, month and a half. Then it started to grab hold and moved higher. And it moved higher into the end of July, which was what, 1, 2, 3, 4 months. And then we got a pretty significant pullback, and then we took off again from October higher into 24. Okay, so again, short-term wise, there's no guarantees in terms of what's going to happen in here. We're extremely overbought. I think I would not be surprised to see us chop around and chop sideways and pull back, etc., maybe even retest the low before we really take off. I'm actually looking for this thing to decline into maybe the end of June. We'll see whether that plays out or not, or whether it even takes that long. So anyway, that's where we sit. So the next thing I want to take a look at is the 10-year yield. So this is kind of an interesting picture. What does this look like to you? This looks like a bullish pennant to me. So when I look at that, I think, well, the next leg looks like this, because here's the flagpole, and here's the pennant, and it looks like that's the next move. So it's going to be interesting to see what does that imply as interest rates go higher. If this really does play out like that, what does that do to the dollar index? So the dollar index has had, as Charlie Bolello tweeted about a week ago, that it had the worst start to the year since 1995. So here is the end of December 2024 right here. And you can see the low so far right now is April 21st. Okay, so pretty negative start. Let's go back to 1995. Let's go right about here. Here's the beginning of 1995 right here. And you could see the kind of start that it had. And where was the low? Right here so far. April 19th. What was ours? April 21st. Well, it's going to be interesting to see if history rhymes in this situation, because, yeah, it was pretty choppy for a while, but by and large, that was the low. And you can see it just started working. Yeah, kind of screwed that up. Working its way higher. Now, I'm not saying that's exactly what's going to happen, but I thought it was kind of interesting when, I thought, well, let me go back You know, many times things rhyme, 30 years, 60 years, 90 years, 30 months, 60 months, etc. So, we almost have a mirror of what's happened in 1995. Okay, that is it for this weekend. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber, hit that little subscriber button. And if you'd like more of this information, head on over to my website at joehenches.net. Everyone have a great week. We got 4 of the Mag 7 reporting this week, right? We have Microsoft, Meta, and then Amazon and Apple. All right, have a great week.